Hey guys, Mike here. So another loaded video for you, and oh boy, the market just continues to roar. 9 straight green days as of yesterday, and I didn't give you Thursday night's videos. I decided to take my son to the opening day of one of the movies, the new Marvel movie that is. So I surprised him with that, and it's a pretty long movie actually, so we didn't get back till super late. So I'm gonna put some stuff in here at the beginning to kind of make up for that. And we got plenty of questions about: 1, why the market's going up; 2, is the Fed gonna cut; 3, what about any kind of stimulus coming up, which we do have stimulus coming up, by the way, just FYI, and a whole boatload of others we're going to talk about. And, just put down the bottom, like, do you think there's going to be a recession? I'm just curious. I want to get your thoughts on it. What are you seeing? Do you feel like there's going to be, do you feel like you're in a recession now? All this stuff, because, I look out there, and again, I go over, I live in one county, but the next city is like right over. It's a bridge over, less than a mile away. So, we go to all kinds of different places. I don't see it, and I've lived through multiple recessions myself. But again, maybe you're seeing it in your area. I know certain sectors are seeing it. There's no doubt. Okay, and yes, I will say this: if this whole tariff thing just drags out through the summertime, I have no doubt we will go into some form of recession, whether it's a small one or medium size, whatever, because the supply chains will be so jacked up at that point in time, and it ain't gonna matter. Okay, but again, that's if things drag out through, May, June, July type stuff. And also, somebody asked about Jim Carson's. Does he have a latest prediction? We'll get into that as well. But here's what's going on. As of Friday, you saw, Japan comes out. Again, they're talking about maybe we'll do some trade talks. Maybe we get it done by June. Remember, this whole market is driven by tariff headlines now. It's just the way it is. China says it's considering trade talks. This is a big one that came out. But they want the tariffs off. And then they say, maybe we'll, talk about fentanyl. And that's kind of a hand to put out there. Maybe the U.S. will take it. And so the market's like, yay, there's some kind of stuff to be done. Now, here's what happened when the data came out. Because remember, the market will sell off quickly on it, but it recovers very quickly as well. And so this was from the PMI data and what people are talking about. And what they're talking about is tariffs, right? How it's throwing a wrench in everything, okay? How it's going to increase prices, how companies aren't even trying to bring the stuff in anymore because the margins will be squeezed to nothing, basically negative almost, so there's no point in even trying to bring them in. And so a lot of people are paying for cold storage, they're paying for dry storage, all this other stuff. And so it's kind of throwing a wrench in all of this. So that's what you're hearing from all these different companies. Feel free to pause this and read it, but it's nothing but tariff, 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 tariff. Because remember, we get the majority of our stuff from China. And when the data hit right here, the market didn't seem to care anything about it, but this is the PMI data right here, and this backs up what these folks are talking about. When you can see clearly PMI prices spike, when you see employment and new orders, well, down. That shouldn't be a surprise, right? Now, this should be start to go down even farther because of all the front loading they did, starting usually is like December, actually, all the way through March. So again, we should see that fall off, but again, they front loaded, so they have inventories of now. Now, when it comes to jobs data, we finally saw a rise in continuous claims and initial claims, and we also saw a decrease in the ADP jobs report. But when we went over here to Friday's job report, that's how it always works, it was more than expected. So the market was like, yay, there's no problem with jobs at all. Unemployment rate 4.2%. People still earning money. And that kind of leads us into the first question here, which is like, is this a dead cat bounce? And the question, and I've told you before, like, you don't know until it starts to just plummet, right? when it comes up here, what are we doing? We're setting higher lows. We have to look at the chart. We haven't reached the 200 yet, but we've checked off a lot of things, okay? We're above the 21 SMA. We're above that trend line. We're above the 50 Fibonacci now. We're above the 50-week moving average. That was actually a big one. We're closing like right at it today, I think, on Friday. But again, we still got to see what happens at the 200. But I can tell you, retail is just buying in like crazy. Plus, we're in positive gamma territory now, but we're in the golden pocket. So if you're going to start to see some form of a pullback, being 9 green days in a row here, and coming up on this 200, past the golden pocket now, this is when you would normally start to see it. And what you really want to see if it comes back down and holds that 50 moving average. And you kind of see why it can fly even higher. Look at this. It can go straight to the 200. You can see in the volume gap here, if there's more tariff talk, positively that is, or more delays and stuff like that, if it gets past this area, it can go higher. But right now, we're sitting at the resistance area at the 200. Right? This is what we've been waiting on this whole time. And again, there's gaps been left behind. So if we do get some of a pullback, there's plenty of gaps to be filled, plenty of fair value gaps as well. So there's a ton of liquidity below us for sure. There's no doubt about that. And, obviously, does Wall Street want to keep buying up and up and up on the numbers? Most likely not. And we don't have any more Mag 7 until NVIDIA, and they don't report for like 2 or 3 weeks. Okay, so we do have gaps below to be filled. But the biggest thing to understand, that's what I was telling members, like, who are getting these exemptions? What are these delays on tariffs? Who is this affecting the most? It ain't small business. Small business ain't getting nothing. Ma and pop stores, they can't afford to go to Washington to write checks to these people. And President Trump saying, please delay. They're not getting any of that. Farmers, nope. It's who? The heaviest weighted stocks in the index. Who did President Trump say he helped out? Helped out Tim Cook. Helped out Apple, right? NVIDIA CEOs running up there. They're writing massive checks. Boom. Helping them out. Don't worry, we'll delay that. We'll get those tariffs later on, right? Ford and GM, run up there. What you need? Cool. We'll go ahead and help you guys out too. So that's who's getting helped out, right? And so, of course, as soon as you start seeing that, what happened to those stocks? They started rounding up. Okay, that's what happened. And then we get earnings. All of a sudden, earnings, they're not doing what? They're not cutting CapEx anymore. Meta increased their CapEx. So they're like, oh, wow, these earnings pretty good, and they're not decreasing their CapEx. Wonderful. And I mean, is Meta really affected by tariffs? We've been talking about that for a while. Not really. Nope, sure aren't. Netflix affected by tariffs? Nope, not really. Microsoft, really? I mean, come on. Apple for sure. But even that one was down 5% on Friday, and the market was up over 1%. That's a rare thing you'll see, by the way, that happens. Okay, and in fact, they only down 5% stunned me, by the way. But it's Apple, so that's one of the reasons why you're seeing this big rally just continue on up, because now the heavyweights, making up a third of the stock market, are moving. Okay, they're moving big time. And in tomorrow's video, I actually will go over this and I'll give you a good answer. I thought about this and did some research. When people tell you the economy isn't the stock market, the stock market's not the economy, really the stock market's not the economy is the big one. But I actually give you some factual data to give to them of why. I think this will visualize for you for the rest of your life. You'll be able to say, oh yeah, that makes sense now. Okay, and so that's why you see economic data coming in horrific, and the market just continues to churn. Because I'll show you why that is if you need it. I mean, I think it's pretty obvious, but if you need it, I'll give it to you. Now, next question says here, Mike, did Jim Carson do any recent vids regarding this time frame? I know it wasn't quite as he pictured it prior to tariffs, but since a short recovery here, I wonder if he shared anything else. And as of the recording of this video, that is a no. And for those who don't understand, Jim Carson, he follows the flows and stuff. And he's pretty much been nailing it. The only thing he was wrong on was the timing of the rally back up. He called it early. But again, he also, which nobody knew, that the president going to hold up a big board with tariffs and think it's down 21%. He thought we'd go down 15 and then make the turn. So we made the turn a little later than he thought. But he even said, I mean, 5,700, 6,000 is what he sees could be all-time high because it's not that far from 6,000. And then later on, he said in June, the Fed's supposed to cut in June. He thinks they'll come back in. But he said structurally, there's too much damage. And I think it's like September, October-ish time frame that, that's when you see a massive like 30, 40% drop. So we'll see. And he's got pretty detailed time frame on that. But nothing new as of now. And as soon as he does, trust me, I'll bring it out to you. I promise. Now, next question says, how do you think the market is going to react to tax cuts if passed and deregulation? I would think this is good for the market. Yeah, it's definitely good for the market. I don't know how to react to deregulation because we've never done deregulation, to be honest with you, to a real extent. But the tax cuts last time happened right here, right? So they were signed on January 1st, 2018. And then on January 2nd, when the stock market opened back up and it shot up, what is that, 6%, 7% in 24 days, right? And then, of course, we crashed down. But again, should it be a positive reaction? Yes, I'm going to tell you something to watch out for. Here's why it might be a bigger reaction, but also understand this is going to be probably easy to get past, but it's going to be very interesting to see how they pay for this.
Now, currently, they'll tell you that everything is on the table, but from our conversations with those on the Hill, it seems like there are a couple ideas that have some more momentum behind them. Among those include an excise tax on stock buybacks. It includes a SALT, but for corporations, so this would cap the deductions that companies can take from state, local, and income tax. It would restrict the amount of executive pay that corporations can deduct, and it would increase taxes on endowments from colleges and universities. Now, of course, a number of these do impact businesses, and the business community is already out full force lobbying on the Hill to make sure that some of these provisions do not make any sort of proposed bill. And you've seen a number of business-friendly lawmakers also raise concerns about how something like a corporate SALT tax could impact businesses. Listen to what Congressman Andy Barr told me yesterday.
The whole goal of extending the Trump tax cuts is to produce growth, is to unleash this economy. And I know that the president and House Republicans are committed to a pro-growth tax reform, and that means no increases on business taxes. We shouldn't be raising taxes on business in any way.
And I don't know if you saw the checks sticking out that guy's coat pocket. That would be big companies, not small companies. He's not raising taxes on small companies. He's talking about not raising taxes on the big boys, okay? That's what he's talking about. But what's crazy is how they're going to pay for it. Because, again, what is the administration trying to get done? They're trying to get down the deficit, right? We're talking this right here. They're estimating anywhere from $500 to $1 trillion in stimulus coming out of this. Okay, by that tax deductions like company be able to deduct their capex faster, all this stuff. And so when you look at it, that's stimulus. All right, so the market you would think react positively to that, but how are they going to pay for it is the different thing. Because I'm telling you, they're trying to say a 3% higher tax bracket on the rich help pay for it. Absolutely not. They already shut that down. Increase on the bigger companies, taxes. Nope, not going to happen. Okay, but you know what they are going to do? They already said it right now, and this is where even Republicans are standing up saying, hold up a second, because they know their constituents are going to be upset. You cut Medicaid, and they want to do deep cuts to Medicaid. And they're like, hold up, you can cut, but not that much. That is funny to me that you want to literally cut Medicaid, but you're like, nah, we're not doing this over here at all. So how are they going to pay for this? Beyond me. If the whole point is to decrease the deficit, and that's very important because that leads us to the 10-year yield. If you increase the deficit even more, what do you have to issue? You have to issue more treasuries and bonds and that kind of stuff, right? Which means yields aren't going to, why would yields drop? The demand is going to, you have to have more demand. You have to be able to entice them to come in and buy even more from you, okay? So that's going to be a whole nother ball game, but they're talking about like end of May, June, maybe when this happens, so we'll watch out for that. Now, this question says, I have a question for Saturday. If the market tanked by 50% and we go into a depression, what 5 stocks / companies would you invest in that would survive and would be potential lottery tickets? Also, when we hit another shipping crisis like COVID, which companies would benefit? Well, I'm not going to talk about a depression because that's actually 3 years or more, so that would be a total mess. But if we go into like a recession, especially a deep recession, which I don't know if we can go into just because all the money people have in the top 50%. But if we did, what I'm looking at is, not specific companies, but utilities, got to have those, right? No matter what you're doing. Walmart, is going to be around. It's not going anywhere. Water companies, got to have water. Insurance, got to have insurance, maybe Progressive or something you want to look at. And you guys give me a fifth one. What do you think? Healthcare. There you go. You got to have healthcare. So maybe hospital, UNH, something like that is what you're going to be looking at. But again, I'm not going to talk about a depression anyway, but now when you're talking about the shippers, it'll be this right here. If that happens, you can just look at this right here. I remember Zim, Danaos, I think that's how you pronounce that one. And I'll show you the chart on that right there, but that's 3 of them you can look at. But look at this one right here. This is the last time. Company went up 2,956%, I believe that is right there, and about 2 years. So yeah, that would be a good return on your money. So those are the ones you want to look at if that happens. Now, last one here says, people keep saying when the Fed cuts it is bullish. It says, true. I thought they were always late and we were in recession by the time they cut. Thanks. Not always true, because when you go back and look, we'll just pull up the last few. They just did a couple of cuts not long ago. What happened? Market went up. Look over in 2019. They did some cutting. Market went up. Then when you go back to where we actually had real recessions, this is where the problem comes at. If there's going to be a recession, yeah, eventually it's going down. But in 2008, it went up when they first started to cut. It was already dropping by the time they cut in 2021. You see a cut there in 98, and the market went up. You would think if they cut, especially if they cut in May and surprise people, or June, and we're not sitting here in a recession or wherever it is, then they're going to end up going up. So imagine getting the Fed cut in June, taxes, and then I don't know what deregulation is going to consist of because we've never actually been through it before. All that, what do you think the market's going to think of it? I mean, that's the big thing, right? And you would think it would be bullish, honestly. So we'll have to see. We'll see if we get a pullback before then or not. But that's what I would think. Let me know what you guys think about that in the bottom. I'm definitely love reading your opinion and stuff. So anyway, we'll have tomorrow's video to set up the week, and it'll be a big video for sure. I have a lot of stuff in there for you. And then, we don't have any big earnings. I'll go ahead and tell you about that. But we do have, as far as important companies, but no mega caps anymore. So again, seeing that 1 to 2% jump in after hours on earnings probably going to happen next week. That will be off tariff news most likely. But anyway, I appreciate you guys watching. Please hit that like and subscribe button on your way out. Think about signing up for the membership. Less than McDonald's combo, and I'll see you guys tomorrow.